The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We start out the show as we always do with the DAX, the German version of the S&P 500. As you can see, it hits the number sequences pretty nicely. We've been in a downtrend since January 27th. Right now, we're in a really tight trading range over the last day or so. Totally different, than we're seeing here in the United States, because the NASDAQ, about an hour or so ago, made new all-time highs in the overnight market. So we'll show that in just a little bit. But before we get to that, I had an email from one of our listeners about the open interest in silver. I'm going to post it here from yesterday. I get this from the Chicago Mercantile Exchange website. Very simple. You just scroll down to data, move over to open interest, and then find the commodity that you want to see, and that'll give you the figures for the day. And as you can see, the silver futures here, the volume was 76,000. Total open interest 191,000, and it was down 2,111 also on an up day. So that's usually short covering, but that's neither here nor there, but that's what you want to keep an eye on anyway. That's how I find it. There are other people probably do their own publication, but I've been getting it from the CME for quite some time, so I'm not worried about whether it's right or wrong, because it seems to be that's where everybody gets their information. That's part of what we're looking at here. Now, I've had a couple of questions. One is hold on one second here. I've got to bring this up here. I wanted to show you. They ask about a stock. Let me bring this up so we can take a look at it. And this is a very interesting stock the person asked me about, which is ExxonMobil. This is where Rex Tillerson, who's our new chief Secretary of State, he was his company, and he was the CEO of it. As you can see here, we're in a major Gartley pattern here. Notice the two red boxes there where you see 50% and 61% retracement. Right around 80.80 in this stock is a really strong support there. You've got, you can see where the trend line was broken back there at 85, but here at 80.60, 80.80, 80.90, you've got two major ratios coming in. You've got a perfect ABCD pattern. That is a textbook Gartley pattern. So this should hold this level. I would think. Now, you have a gap down a day before yesterday, so that could be of some significance. But watch that level very closely, because it would be interesting to see if it's going to hold that level at this particular time. It would be something that is a comment on the oil. Yes, I think the oil, watch the oil at 53. We were watching oil all the way. I still think we've still got a shot at that $50 per barrel level. We have to wait and see, but frankly, right now, you just got to keep an eye on $53 a barrel. That's a 61% retracement off of the last high, and that's the main one that I would be watching. Okay, now one of the other questions. I happened to be speaking to Jim Twentyman yesterday, who worked with me. He was my compadre at Drexel for 5 years. Of the 6 that I was there, and we were reminiscing about the old days and how much fun it was working there. Folks, Drexel was really a family boutique firm. It was really a really neat place to work. Milken had the second, third, and fourth floors of the building for his junk bond operation, but on the second floor they had their dining room there for the corporate dining room for Milken's group. and they had a popcorn machine, just a regular, real commercial popcorn machine like you would find at Disneyland, and he had someone running it every day. It started about 10 o'clock in the morning and went through till they closed everything up, usually about 9 o'clock at night. So he was a big aficionado of popcorn. The other thing that Jim reminded me of is when anything really exciting was happening in Los Angeles, like during the 70s, Star Wars was really big, and it was really hard. You had to stand in line to get tickets and stuff like that. Not if you were at Drexel. At Drexel, Mike would rent the theater. He rented what was the name of that place? Oh, shucks, it's right in the middle of Century City Theaters. It was all, beautiful Century City Theaters. And he rented the whole theater for all the Drexel employees. And, it was really nice. You go there at 10 o'clock in the morning on a Sunday, and you could see any of the things that you wanted to see. So those were some of the perks that we had. And then the other question that the person asked me was, what was one of my most memorable things that I had happen when I was at Drexel? There are so many of them. They keep coming up. But my daughter yesterday, because I was speaking with Jim, I called her, right afterwards because she's doing something for me. But she reminded me of something that happened, back in '78. Milken was doing a big bond offering for Lincoln Savings. That was Charles Keating's firm. And the way that Milken made his money, folks, is they basically control the junk bond market. So if you wanted to buy junk bonds, the market was extremely hot. In other words, it's hard to get them. But if you wanted to sell them, the market was colder than a gravedigger's patootie. So the way they made it, usually on a bond, you made about a point and a half, which was about $150 if you sold a $10,000 bond. And what they did is they had spreads going from $20, $30, $40 on these things, and that's how they, that's how they did. Yeah, who says crime doesn't pay? The difference. Well, hey, listen, these guys were pikers compared to Mr. Logan's favorite person, Jamie Dimon. I mean, he paid $19 billion in fine and never went to jail. Hello? Okay, who knows? Anyway, okay, two things. One day they were having a special opening of a Lincoln Savings Lincoln Savings Bank in Beverly Hills, and they had a special guest. It was Leonard Sly and his wife. And those of you who don't know who Leonard Sly is, his real name was Leonard Sly, but his stage name was none other than Roy Rogers. And Roy Rogers and Dale Evans were going to be greeting guests of Lincoln Savings in a private ceremony or private room there to people that had a $10,000 savings account. And my ex was a match. No, Trigger wasn't there. Neither was what was his name? Pat Buttram, and what was the other one? What was it? Oh boy, I tell you, all that stuff. If you really want to see, well, let me finish this story. Come on. All right. So my ex-wife was really infatuated with Dale Evans and Roy Rogers. So I surprised her. I took her into the back door. She didn't know what was going on, and he was standing there, and she almost fainted. And of course, he was very, very cordial, and she talked to him about all the things that she had followed him, and the fact that they got married on New Year's Eve, and it broke her heart when she was 7 years old or something like that. Anyway, her and Dale Evans sort of made friends, and she invited her to come out to the valley where they lived, and by golly, we went out there. I'll finish the story in just a minute. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks. Anyway, regarding Royal Rogers, when they sold his museum out there in Antelope Valley, the stuffed horse Trigger sold for $250,000. His boots and shirts were going for $5,000 and $10,000 for a shirt and boots. His .45 caliber matching Colt pistols, they were sold private. They didn't know what the price was on those because somebody bought them in a private sale. But it was really amazing. The dog Bullet, guys, I think the stuffed dog Bullet was sold for $50,000, and the Jeep Nellie Bell went for about 10 times normal price for an old Army Jeep. The NASDAQ missed it by 1.5 points. You're right, Mr. Bill, by 1.5 points to 2 points. We were looking at 52. We still could get there, of course. 52.03 is what we were looking for. It got to 52. What did it get to? 52.1.5, I think, is what it got to last night. So maybe these numbers don't work at all, but what the heck, we'll look at them again some other time after we finish some of these other things that we're looking at. If we look at the Dow Jones yesterday, these markets are very, very quiet, folks. I mean, there's no volatility at all, which is really amazing. You'll notice here yesterday in the Dow Jones, we made a beautiful ABCD touching the low from the 7th. That's really all that it's did. And all we've done today is just get back into that same trading range again without anything happening to go on. Oh, we got a caller from Martinez, California. Brent, how are you?
Doing great, Larry. How are you?
I'm very good, my friend. What can I help you with?
I'm hoping you can bring up the chart on the stocks.
I'll do my best. Just give me a second.
Sure.
Here, and I think I've got it. So, yeah, it'll take me a second to post it into the room here, but This thing has been going up forever, maybe even longer than forever. Now, this is the semiconductor. Is this the semiconductor index?
It is the Philly semiconductor index. So my question for you, I'm looking at it on the short side, but so on the daily, there's, you can see that it hit that high, but I was going further back I was looking at a weekly 5-year chart. And so
I haven't gone that back. That's a little past my pay grade, Brent. But let's just look at this. Right now. The thing that you've got going for you, you've got these three dojis there in a row. I mean, that in itself is a very rare occurrence. So your risk here is really quite small. I mean, I would risk not more than about 4 or 5 points in that, at the very most, and at 972. That's not a bad risk-reward ratio. I don't know what it looks like on a bigger. Let me take a quick look here, and I'll see if I can find it on a little larger scale. But frankly, when I go past those, when I get into those long things, they scare the heck out of me because I'm a really good short-term trader. Yeah, well, you got a big ABCD there. That's right. You've got a really nice one. Yeah, let's just show the folks that one because that looks really interesting. It's not unless it defies Isaac Newton's law of motion, it's going to come down. The question is whether it'll do it in our lifetime. That's the secret. So let's see if we can get this up here to let you folks see it on a little longer. There it is.
Hold on. From like 345 to up to about 750, then back to 550, now up to 970. So.
Yeah. That's what it looks like. The risk here is really small. Probably the easiest way to do it is to sell it on weakness, and that way you don't have to pick a top. You could wait for that to happen, and then you have a place to put your stop in. You know what I'm saying? Yeah. You don't have to try to catch a falling knife. So figure on a $970 item, I would think $5, 3.5% would be more than enough for a stop point in it. That's what it would look like to me. But, unless Isaac Newton's laws are going to be repealed, it will come down, but maybe not in our lifetimes.
It looks interesting. We'll have to. I'll keep an eye on it.
For sure.
All right. Thank you very much, Larry. You take care.
You bet. Thanks for calling in. By the way, my daughter told me, and it's no longer a drought situation out there anymore. That's really pretty good.
Oh, boy, it's been quite a winter. It's been, we had a big old tree come down. Our neighbor's tree came down. It's probably a 300-year-old tree just from so much rain and wind. And so it was kind of sad to see the thing go, but I'm just glad nobody was hurt. It went away from his house, fortunately, out to the street. But when it came down, the whole house shook. It was, a huge tree.
Yeah.
I'll send you a picture. You can see what it looks like.
Yeah, I'd like to. I had a tree come into my house in Tucson the day Mark Douglas moved there on August the 16th, 1996. Lightning hit the tree and split it in half, and it was like a spear. It went right into the top of the roof and went right into the master bath and did about $25,000 worth of damage. But fortunately, the insurance covered it all. So nobody was home, so it was not a problem.
Yeah, it's pretty scary. Those things are very heavy. It can do a lot of damage. It can easily kill you. So I'm glad you're okay.
I watched these tornadoes in Louisiana and Oklahoma and stuff. We had some in Indiana when I was growing up. And boy, folks, I don't think there's any more. Everything's destructive, of course, but it's so fast with tornadoes. They just it just rips everything in its way, and it happens in a matter of a minute. A tsunami and stuff like that takes an hours and stuff to form, and floods and things like that. But a tornado doesn't give hardly any warning sometimes, and you don't want to mess with those things because boy, they are. You can see pictures of where it just levels everything, and that's really what happens. And hopefully no one ever has to go through that, but. Nature's a very ominous thing when you make it mad.
That's right. All right, take care, Larry.
Okay, thanks a lot for calling in.
Sure.
Okay, folks.
All right, bye.
You bet. Let's take a look here. We got a second here. I want to get into the gold market here. I was listening to John Logan talk about the gold, and this is what we were looking at yesterday in the gold, and then this is the chart from the day before yesterday, and then here's today's chart. lined up. We've really haven't done really very much at all today. We got down to 1238, which is nothing more than a $9 move off the bottom. That's about all we had. Last week was a $9 move to the bottom, but we do have this strong area up here in this 1244 level. Our high last night was 1247, so it's held up, pretty well. And I still think we could probably even go higher in the gold. Like I mentioned, there's nothing worse than being a sold-out bull, and that's what I am. I'm not complaining, but I certainly would like to get back in this whenever I get a chance. We're going to have to take a break here pretty soon, and then we want to get back to talking about the stock market here, because we have some interesting things here in the New York Stock Exchange Index that looks very, very interesting here. We'll take a quick look at this, and then we'll talk about it when we get back from the break. This is the basically the New York Stock Exchange Index, and in the green line, of course, is the NASDAQ. And as you can see, the NASDAQ has gone on to new high ground where the rest of the stocks really haven't done this. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I've posted the chart of the New York Stock Exchange Index. As you can see, the NASDAQ has gone into new highs. The S&P, of course, the New York Stock Exchange Index, of course, has not. That's just a divergence that we see more often than not, because that's the real market, the New York Stock Exchange Index, whereas the NASDAQ is basically 20 stocks out of the 100 that are there. Those are the big ones. The next chart that I posted, of course, is the chart of crude oil here over the last couple days. As you can see here, we're now popping above the 61% retracement at this $50, 53 something a barrel. If we have a lot of gusto in this market today, if we get it moving very quickly, this market could easily break out of this trading range that we've been in between 55 and $50 a barrel. But this is a real critical area that we're looking at right now at this 53 level. Now, there is not a pattern there other than a retracement pattern in order to, to be tempted to the short side. You want to have several ratios or patterns coming together to give you some verification that it's going to be some type of a stopping area, but we certainly don't have that. That was the same thing that we had when we were talking to Brent from California on the SOX index. In other words, it's been up here 3 days with three little dojis. In other words, inside ranges all the time, which usually means distribution. But the easiest way to do it is sell it on the way down, and then you know what your stop is, because if you sell it here, you just have to pick a number like 3%, which on a $970 number, you'd be looking at roughly $5. Now, if you were doing 3% on a crude oil, you'd be looking at $1.50, and that's 1,500 large, and that's a little too much to risk in the crude oil. So there's really nothing to do here other than to watch it to see what the next pattern is going to be, as opposed to what we see in gold. We see lots of patterns in gold that are lining up. We see good patterns in the NASDAQ and other things, and that's we'll take a listen. So when are we trading at 23.10 on the ES? I guess soon, maybe today. I'm not sure, lady, but hopefully maybe someday it'll get there, make everybody extremely happy. That's only, another 20 handles, which if something happens in Washington or Denmark or someplace like that, the news could get it to that spot. It's beyond my pay grade, that 20 points. I'm looking at it here at the 2095, 2096 level, basing it on what that NASDAQ is, because the NASDAQ has been the leader of the parade, and if the leader of the parade gets tired, what do the people that are in the parade do? They usually disseminate and go out and eat popcorn and go to Disneyland. So I don't know if there's going to be any volatility coming in this market ever again or not, but folks, when you historically look at this, and this goes back, the chart I'm going to post now, we've showed this before, they are invincible. Amen. Well, it's got to get quite a bit above 22.95. There could be a Gartley up there. That's correct. But this is the commitment of traders, and it shows, the lopsided event of the shorts. You can see those green lines that are there. That shows the heavily short side of the market. And if all you have to do is look at those green lines and look what's happened after those green lines, and you get a pretty good idea that they're not always right. So remember that as you're going through looking at some of these things, and to be watching it. By the way, our good friend Mr. Z has told us that we're going to have a crop report today at noon Chicago time. This is going to be a big one. We're going to be looking at wheat, corn, and beans. I really like the meal. If we can get the meal down about $9 or $10 from where it is right now, get a really bearish report, I think it'd be in an area would be really, really, really strong support. But actually, the charts for wheat, corn, and beans, even though there's a lot of stuff out there, folks, it really doesn't look that bearish on the charts. I mean, that really is surprising. I was speaking to Rich Anderson, who will be our guest next week. And he said basically he was seeing the same thing, that the cash markets were firming up, and even though there's lots of crops out there, these things are holding up extremely well. Remember, we're only one season away from famine, folks. If we ever lost one of our crops, big time, I mean losing like 50 or 60% of it, which would be unusual, but it could happen. You're talking about famine in the world because of all the exports that we have. And if something should happen to China, something like that, there's not a, it's hard to store all that food. That's the problem. And, well, that's neither here nor there. We'll go from that. Let's get back into the trading things that most people, like to talk about while we're doing these things. The question that someone else had is about this. We'll talk about this island reversal again, because this is a very, very, yes, I will. I'll do the TLT at the break. I'll be happy to do that for you. I'll do Treasury bonds at the same time here. But let's take a look here at this cash S&P. You'll notice that we had a gap down with an island reversal. Then we had a gap up with an island reversal. Yesterday's low almost went and touched the exact low of the gap. It missed it by 10 cents. And so now we're just in the same range again. So I think this is just something like a time bomb ready to go off. I don't know if it's going to blow up to the upside or blow to the downside, but something big is going to happen here. I mean, this is a really unusual chart formation, folks, in both the and also in the Dow Jones. The Dow Jones is doing the same thing. It's doing that same high-level consolidation, I suppose you could call it. But that's neither here nor there. Remember, one of the charts that we posted here that's been on the internet quite a bit, and I wanted to bring it up. This goes back well over 100 years, and we'll take a look at this one. You'll notice these consolidation ranges. The difference is the consolidation range that we had here is different than the first two. You'll notice the first two had highs that were hit many years in advance. Here we had higher highs all along because that's an expanding 5-point reverse wave pattern that we've seen happen. That's still in effect in the S&P and the Dow Jones and the NASDAQ, but the NASDAQ has actually went above it by just a little bit. And when you're talking about an index that's at 5,200, 50 points isn't a lot. So I'm not sure that that's going to be a big problem or not, but we'll watch it here just a little bit. Let's just take a quick look here at the Treasury bonds. This is something that I was looking at this past week. And there we go. This is what we want to talk about. We got up to, one second here. We'll look at the bonds first, and then I'll do the TLT. Yep, Dow 50,000. Sounds good to me. We got up to 53.20 yesterday, almost took that high out from January. Now, we did take that high out in the Treasury notes, but we did not do it in the Treasury bonds. So, this market has had one heck of a good rally. In that low that down there on December the 15th was an exact 61% retracement on the weekly. So this is why, you're having this rally. Now, how much more of a rally it's going to be remains to be seen, but we want to keep a very, very close eye on this because, this means that interest rates is going lower, and this old cowboy, he doesn't think they're going to go a whole lot lower before they go a whole lot higher because long-term, that bond chart is flat out bearish. This is only a 382 retracement. So we'll take a break here. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, by request, we're going to take a look at TLT. This is the ETF for the 10 and 20-year notes. As you can see, we made a top back here in July. Beautiful 3-drive pattern, a butterfly at the 127, 1.618 expansion. We came down from 144 down to 117, and over the past 2 months, we haven't even been able to get into that gap area up around October, not even made a 382 retracement. What we did do is we did match the rally that we had during September, October, almost exactly. It rallied just about 7 points, and the same thing has happened here. We've rallied about 7 points. So this is still in a bear market to me, which means that rates should be going higher. The $64 question is whether they're going to go higher. They don't always do what I like for them to do, so it's important to remember that as we look at some of these things. I wanted to, since we have this crop report coming up today, I wanted to just alert you what I see here in the corn and stuff. So just give me 1 second so that I can pull the chart up that I just put. Here it is, and then we'll bring it right up and we'll be able to take a quick look at it. Hold on here a second. And we'll bring it up. You'll see here we've got the corn in here. We got a major crop report today. We're in an uptrend. As you can see, we have higher bottoms. We completed a beautiful ABCD pattern here about 2 weeks ago, and these things follow the full moons and new moons, and you'll never guess what we have tomorrow. We have a full moon with a lunar eclipse, so that's going to be a real interesting one to watch. So pay close attention to that. It should be a biggie. That's what I would think, but we'll neither here nor there. We'll take a look at it. So we'll see if we're going to, we did make a new high in the NASDAQ at 52.02. We're still looking for 52.03. We're only a 1.5 points away. Whether that's going to hit it or not, it's going to be close. It's 52, and down the stretch they come. And here comes 52.03 around the corner, ridden by Patrick Valenzuela. 52.5. It's almost, I have an order setting there, folks. That's why I'm listening to it. Anyway, just I got to turn off this alert, or otherwise it's going to drop me, make me crazy. Okay, on the next one we want to look at here is the corn. Notice the trend line, the support line. This is an uptrend, folks. If you get a bad report, something's in this market. I mean, they're willing to buy corn when there's a lot of corn out there. and a big crop coming probably. So just keep in mind that you got to put a stop in, but watch the market today. It's going to be really crazy, but keep an eye on it. I'd love to see meal down about $9 or $10 down to that 327 level. Boy, that would to me would really be the old breakout level, the 61% retracement. All of those would really be a nice thing to be looking at. So those are just some of the things that I'm watching for today. So we'll watch these as we go. The question about the 2296 in the S&P, the old high is 2298. It could take that out. I don't think it means a great deal. If it does, just because of the patterns that I'm seeing in the New York Stock Exchange Index, also in the NASDAQ, this is a pretty big completion pattern. At least it appears that way. But we'll let the markets tell us, what's going to happen, and that's really all we need to do. We don't have to do any more than that. Okay, now I had a question about the biggest error that you can do in trading. What is the dumbest thing that you can do? Well, I can tell you from personal experience, the dumbest thing you can do is add to a losing position, averaging down. I know people tell you that you can do that, but frankly, folks, the one time that it doesn't work is going to wipe you out. All you have to do is read some of the old masters like Jesse Livermore or Bernard Baruch or George Cole or any of these guys that are around, what was his name? I can't even think of the guy's name. I'm trying to think of McGee's father-in-law's name. Oh, dear. Anyway, all these guys wrote about the same thing, is that you just can't add to a losing position. And the reason why is you're doing two things totally wrong. A, your analysis of what you're looking at, your premise is wrong. You're thinking it's going to go up and it's going down, so you're wrong about that. And now what you're going to do is you're going to turn around and put more money into it. AE, risk more. Hello? Somebody knock on wood. Man, this is not good. Those two things that are wrong. Now, if you want to add to winners, that's different because your analysis is correct and you don't have to put up as much money because you got profits in there. Not so if you're adding to losers. That is by far the dumbest thing you can do. The second dumbest thing is putting your stops too close, is, putting them in the normal flutter of the market. I used to go over the statements with Mark Douglas because he was doing work for Merrill Lynch, and we would go over these statements of why customers kept losing. And you could see this all the time, that the people that were using real tight stops were the ones that were getting banged up all the time. So that's the main thing. It's pretty much about marriage is the same way. Sometimes you get stopped out, and other times you get stopped in. You just never know. Okay, let's move on to the next one here. See if we got to our, we didn't quite get to 03. We got to 02.5, so we have to get back to our oscillators to see if that'll get us into the market eventually. Regarding the Treasury notes and Treasury bonds, I've already talked about those. That notes did take that out on a big run up. And, there's still a strong possibility, I believe, that we're getting ready to see some more movement, in the interest rate markets to the downside. In other words, higher interest rates. But the U.S. dollar is holding up relatively well here. We've talked about this euro at this 108 level. We haven't been able to get above that. We've got all the way down to the 106 and change. So we're locked in a trading range between 108 and 106 in the euro. And believe me, the euro's been here for a long time, so all it takes is one tiny little bit of nudge, and this could go over the edge. So watch that one very, very closely. It could be a very, very interesting one to watch it, because it's very, very important in everything that we do, is that dollar, because that's all the interest rate or all the foreign exchange. And the foreign exchange market starts in London, folks, 8 o'clock London time, which is 2 in the morning. I can't even remember. I can't even think this hard this early in the morning. So let me see, 8 o'clock, 5 hours difference. So that would be around midnight. So that's 1 o'clock in the morning. So we'll see how it ends up here. But that's where the real market starts to jump around. It's not the Asia. Asia's not nearly as big as what we see in London. I know they don't want to hear that, but that's the truth. That's how it actually goes. All righty. We have another question about, what was it a question about? Oh, dear. Oh, Apple. Folks, Apple's most probably going to make a new high because we're at 131 and change. I think the old high was 133. I mean, it's almost like magic that it's going to get to that level. Whether it means another breakout, I don't know. But remember that huge gap that we have after the earnings. We got about a $6 gap. And all you have to do is to look at an Apple chart going back to when it started, in 82, and all these gaps are filled. So there's not a whole lot of mystery there. All you have to do is to just get in and just wait till these gaps are filled if you want to put a position on. So take a little break here, 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're taking a look at gasoline futures. As you can see, we completed a Gartley here at the 50% level. Yesterday, we had that big move up. That is pretty much a what do you call a breakout move to the upside. However, if you'll notice the 61% retracement, it hasn't quite got there yet today. So that could be just a one-day aberration, but watch it very, very closely because this is something that should be pretty important to keep an eye on because it's going to be very, very interesting to see if it's going to keep that going in that direction. This is just like the crude oil. We got above that, just as we were talking about it, that 53 area. We went to 53.20. We're back to 53 in the crude. So all that could be is just a quick returning move to the downside is all it is. So that's the main thing that you want to keep in mind as you're looking at that thing. Two things to keep in mind. Very, very important. We have the crop report today. We're going to be talking about that tomorrow. And also we do have a lunar eclipse and a full moon tomorrow. And that is usually a very important cycle. So there should be a lot of things rocking and rolling. So make sure you get a good night's sleep. And if you don't sleep, then trade the euro because that'll keep you awake almost any time during the night with some of the great moves that we have in that little puppy during the day. So remember, folks, keep an eye at 5203.5 on the NASDAQ futures. That's going to be an interesting spot. And use your oscillators to get you into the trade, and you should be okay. And make sure you put a stop in, because if you go for broke, you just might succeed, and that's not a good thing to do. All right, folks, I think we're almost at the end of the day here, aren't we? I don't hear the music yet, but that's about it. Oh, that's about it. Okay, that's all I got to say. Anybody got anything else to say? I don't think so. I ran out of words. My God, an Italian ran out of words? That's an oxymoron. Well, we'll see you all, folks, tomorrow, no matter what happens. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen.